Good afternoon. Welcome to Marco on Markets. My name is Marco, and I'll be just having a look at the share market this afternoon, see how it's progressing, and I'll share my progress as well. So I'll just bring up my watch list. This is my approved stock watch list. I'll just sort from biggest increases to biggest decreases. So Coles, they had that announcement. VEA, which is Viva Energy, they do the fuel. It's up a little bit. JB Hi-Fi up 0.94. Wesfarmers is at 0.62. Okay, Sigma's down 0.717, pretty flat. All the banks are starting to become flat now. As if you watched an earlier video, you'll know that I purchased CBA this morning, and Aristocrat, that's another one of my holdings, and AX1's another one of my holdings. So at the moment I've got Westpac, Commonwealth, Aristocrat, and AX1. I might just fix up my holdings here. ALL, yep, and we just need to add Commonwealth into that. CBA. Add that to my watch list. To my holdings. Okay. And then when we go to watch list, should be there. So we've got those four. So they're all down. I'll just update my modified portfolio view for YouTube. So the holdings are correct. The number of units is fictitious. I didn't really want to get on here and put the actual value amounts, but the trades are real. It's just that the values are slightly different. Well, slightly or not slightly, they are different. So ALL is 61.47.723, CBA is 171.60, and Westpac 36.56. So I'll just go through. I just exported this earlier today just so I could display my portfolio and also to show things that I look for. So I've got the code here, the company, the purchase date, how long I've been holding it for, the quantity of shares. So as I said, the quantity is fictitious. I've just based all the trades for YouTube around $40,000 just to have an amount there rather than just talking in percentages. So the market value we've just input, these are my average prices. There's the market value, and there's the loss or gain based on the share price. And that's the percentage there. So, so for some of the longer stocks, over time you do get dividends. I've just popped those in based on the quantity. So for Aristocrat, I've had 2 dividends since I've had it in November, one 50 cents and one for 49 cents. AX1, the same there. I've had 3.25 cents, 1.5 cents, and 5.5 cents. And what that does, it does bring down your overall loss, because I do look at total gain or total loss. So you need to adjust for any dividends that you receive. I do try and work on just capital, like a capital gain of 2%. And if I get a dividend, that means that I've probably held a stock for a decent amount of time, and I'd sort of count that towards just covering the opportunity cost. For example, I could have that money sitting in a home loan or an investment loan, reducing interest at really no risk. So this is the situation. So Aristocrat's down 2%, AX1 64%, which is huge. That's the biggest loss I've ever held since I've been trading in 5 years, 6 years. We've got Commonwealth, so that's up 0.69% since this morning, and Westpac's up, down 0.5%. I bought that one yesterday. So I will consider late this afternoon about whether I sell Commonwealth, because if I can get 1% on the same day, that's a really good return. I might just add a column in here, adjusted percentage gain return annualized, because if you have a look at, if you're able to get 0.69% every day of the year, how am I going to do that? Let's say that's so we'll have to do an if statement. If this equals 0, then that times 365.25, which is, it takes into account the leap year. Otherwise, do, if it's 0, right. Otherwise, what we do is we multiply that by, how are we going to do this? So that's the return multiplied by my brain can't think at the moment. I think you have to do it as a percentage. All right, let's try that. Divided by 365.25. I don't think that's going to work, but let's see. So for the, let's do a little check. So if you were to get 0.69% times 365.25, you'd end up with a return of 252% in a year. And then let me copy these. No, that's not working. I'll have to have a think about this. I forget how. Actually, if I do it in my cell calculator, I'll do the actual calculation. So it's the number of days divided by the actual days times by the number of days divided by what was it, the number of days, B22. So that's the margin divided by the number of days. So the margin So it's N 5 divided by D5 times by 365. Okay, I think we're on it. So if you were to get, although that one's not working because it should be negative. I think it works out the same. I don't know. I'll come back to that because it needs some work. I think that one's correct. So, all right. Let's have a look. Bring the market back again. Let's do a refresh. And then go to holding. Okay. So 171.56. So that's dropped a little bit. Still 0.67%. Look, if you can get to 1% on the same day is pretty good. But I will leave it there. Have a good afternoon, and remember, this is just for information and educational and entertainment purposes only. It's not advice on how you should invest. You should do your own research and speak to a qualified advisor. Have a good day.